10 days ago, Bitcoin touched $59, its lowest point of 2026. If you were watching the market that week, you probably felt it too. The Crypto Fear and Greed Index hit 11. That's deep in extreme fear territory, one of the lowest readings of the year. Here's what's interesting. Bitcoin has now bounced more than 11% off that low. We're back above 66,000 Canadian dollars. But the Fear and Greed Index? It's still sitting at 37, still in fear, still flashing red. So which one is right, the price or the sentiment index? And what does a reading of 37 actually mean for the decisions you're making with your money right now? I'm your crypto compass. Let's get your bearing. In this video, I'm gonna break down exactly what the Crypto Fear and Greed Index is, how it's calculated, and what it means when sentiment lags behind a price recovery like this. And this is the part most guides skip. I'll show you what a reading of 37 has historically meant for Canadian investors doing DCA in a TFSA or RRSP, and what it might mean for your strategy right now. Stick around, because by the end of this video, you'll know exactly how to read this index and stop letting it control your emotions. Let's start from the beginning. The Crypto Fear and Greed Index is a daily score from 0 to 100. 0 is extreme fear. 100 is extreme greed. Right now, it sits at 37, squarely in the fear zone. The index was created by Alternated.me, a data analytics site, and it pulls from 6 different signals to produce one daily number. Here's how those signals break down. About 25% of the score comes from price volatility, specifically how much Bitcoin has moved compared to its 30-day and 90-day average. High volatility usually signals fear. Another 25% comes from market momentum and trading volume. If Bitcoin is rising on strong volume, that pushes toward greed. Flat or falling on heavy selling, that pushes toward fear. The third factor is social media sentiment, tracking how people are talking about crypto on X and Reddit. Right now, that's still net negative, which is pulling the index down even as prices rise. The remaining weight is split between Bitcoin's market dominance, Google Trends search volume for crypto terms, and market surveys. The key thing to understand, the Fear and Greed Index is a sentiment indicator, not a price predictor. It measures how people feel about the market, not where the market is actually going. Those two things often diverge, and that gap is where most beginner mistakes happen. Now that you know what the index is tracking, in the next section, I want to show you something that's happening right now that surprises a lot of people. Here's the thing that confuses most people. The price recovers faster than sentiment does, and that's completely normal. Think about what happens during a crash. Prices fall, fear spikes, people panic. They talk about it on social media. They search as Bitcoin dead on Google. The Fear and Greed Index picks all of that up in real time. Then prices start recovering. But the people who got burned, they don't instantly flip to being optimistic. They're still cautious, still checking the news, still nervous. That negative sentiment takes days, sometimes a couple of weeks, to actually shift. So the index stays depressed while prices have already moved higher. We saw exactly this in November 2024. Bitcoin was already 15% off its local bottom before the Fear and Greed Index climbed out of the fear zone. The investors who waited until the index showed greed before buying missed most of that recovery. Here's the data point that matters right now. Standard Chartered, not a crypto blog, one of the largest banks in the world, formally called Bitcoin's June 5 low of 59,375 tons the definitive cycle bottom, and set a year-end 2026 target of $100,000. Whether or not you believe the $100,000 call, the point is, institutional money is making decisions based on where the price is, not where the fear index is. And the index is still stuck in fear. But here's the part that's most relevant if you're a Canadian investor, and I'll explain that in the next section. If you hold a Bitcoin ETF inside a TFSA, something like BTCC on the TSX from Purpose Investments, you're exposed to Bitcoin's price movement through a tax-sheltered wrapper. That actually changes how you should think about fear and greed readings. Here's what historical data shows about DCA ing into Bitcoin ETFs when fear and greed is between 25 and 50, what I'd call the fear zone. versus waiting until the index crosses 60 or above. The pattern is consistent. Lower fear readings at the time of purchase have historically correlated with higher 6-month returns. That's not a guarantee. Crypto is volatile, and past performance doesn't predict future results, but it gives you a rational framework instead of an emotional one. The right question isn't, is the index scary right now? The right question is this a moment where systematic buying makes more sense than waiting on the sidelines? For Canadians who contribute to a TFSA or RRSP on a monthly schedule, that actually simplifies things. If your regular contribution date hits while the index is at 37, history says you're buying into the better half of the market cycle, and, as Warren Buffett put it, be fearful when others are greedy and greedy when others are fearful. What you should not be doing is changing your strategy based on a single day's reading. The index is a signal, not a trading system, and it's only useful if you understand what it's actually measuring. If you're finding this useful, hitting subscribe means you'll catch my next video. I cover the Canadian crypto landscape every week, and I keep it exactly like this, clear and designed for people who want to actually understand what's going on. So let's make this concrete. Here's a simple 3-rule framework for using the Fear and Greed Index in your investing approach. Rule 1. Use it as a temperature check, not a buy trigger. The index is useful context, not a trading signal. Checking it before making a move is like checking the weather before you go for a run. It gives you information. It doesn't make the decision for you. If you find yourself about to make a large unplanned purchase because you're feeling FOMO, check the index first. If it's above 80, that's historically been close to local tops. Rule 2. Extreme fear is a DCA signal, not a panic exit. When the index dips below 25, like it did on June 5th at a reading of 11, the historical pattern says that's often within a week or two of a local bottom. It's not a guarantee, and you should never bet money you can't afford to lose. But if you're on a regular monthly TFSA contribution schedule, an extreme fear reading is a reason to stick to the plan, not abandon it. Rule 3. Never impulse buy during extreme greed. When the index hits 80 or above, that's historically been closer to local tops than local bottoms. If you're checking prices every hour because everyone online is celebrating and you feel like you're going to miss out, the index is warning you in real time. That is not the moment to make your biggest purchase of the year. At a reading of 37 right now, with Bitcoin recovering, institutional buyers like strategy adding at these levels, and the 13-day ETF outflow streak now reversed, the index is telling you that the crowd is still nervous. Historically, that's often a reasonable moment to be adding steadily, not sitting frozen on the sideline waiting for the green light that everyone else is waiting for too. So here's the bottom line. Bitcoin is at $66,000, and the Fear and Greed Index is at 37. That's not a contradiction. It's how recoveries actually work. Sentiment always lags price. It's the same every cycle. Right now, with Standard Chartered calling the $59,000 low as the definitive cycle bottom, with the 13-day ETF outflow streak finally reversed, and with institutional buyers accumulating, the price is telling you one thing, and the fear index is still telling you the old story. The index is a tool, a good one. If you understand what it's measuring, use it to stay calm when the crowd is panicking and to stay cautious when the crowd is euphoric. Use that way, it can make you a better investor. If you want to know how to actually buy Bitcoin through a TFSA in Canada, which platform to use, what fees to watch for, and how ETFs like BTCC compare, I've got a video on that linked right here. And drop a comment below. What's the most surprising thing you learned about the Fear and Greed Index today? I read every comment. Hit subscribe and the bell notification so you don't miss the next one. I cover the Canadian crypto landscape every week, and I keep it exactly like this. See you in the next video.